Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 22nd, 2016. So what happened in the market last week? Well, it went up a little bit and it came down a little bit. And I say, yeah. So what's next? That's the big question, isn't it? That's what we really want to know is what's next? I I like to read a lot of financial articles, both for information and for entertainment. And I laugh. You see so much that the people who write about the market, they anthropomorphize the market, meaning they give it human characteristics. They say things like it's reaching for 1950, or the market is taking a breather, or it's stalking new highs, or it's seeking direction. Now, those make for good reading, they're entertaining, and maybe it is relevant, maybe it is appropriate to give the market human characteristics, because after all, it is a collection of humans. It's the analysis, the thoughts, the beliefs, the emotions, and ultimately the actions that millions of participants in the market take that create the reality that we see on the chart. And the reality that we see on the chart is ultimately what matters, and that's what I base my trading on. So last week the market went up and it came down. What's it going to do next? Well, this is the 60-minute S&P 500 futures contract. So every price bar on here represents 60 minutes worth of time. It's a short time frame. I showed this last week, and I like it for a shorter term projection. And there's a super clear Elliott wave pattern playing out here. We've got wave one, wave one down, wave two up, really sharp wave three down, which was the end of December, and the big decline we had into late January. And then we have this corrective wave, wave four, and now evidence that wave five is starting. But this move up, this is not typical of an Elliott wave pattern. It's a bit of an anomaly. So it clouds the picture just a little bit in terms of what's going to happen next. But let's review what happens in a wave four. Last week I said if this blue line, first we had this really clear sequence. The definition of a trend is downtrend is lower lows, lower highs, lower lows, lower highs, lower lows. And I said if this sequence got broken, then this particular leg, this particular move had been invalidated. And so it did break up above that, and then we went up and made this minor new high, low, higher, this thing here. Now it's heading down again. So this brings up a really interesting point about the market. And first is it doesn't follow perfectly predictable patterns. If it did, it would be really easy, wouldn't it? It would be really easy to predict what's going to happen and to profit wildly. The market does move in predictable patterns, but they're not perfectly predictable all the time. There's this really interesting concept, though, of what is called fractal symmetry, and that is the patterns that we see on larger time frames or even on a larger scale on the same time frame. Those same patterns repeat themselves on smaller scales. And if these are waves on the chart, if we call this a wave, which I am, right? Wave 1, 2, 3, 4, 5. Those are waves, but there are waves within waves. This move down was really clear, and then this move back up, it actually had little waves in it, right? And that's called fractal symmetry. And so the key in the art to analyzing a chart is try to figure out what's the big picture and which of these waves really matter. So if we do say this is wave 3, this is wave 4, and for wave 4 to be intact, we want to see lower lows, lower highs. So right now, this high has not been taken out yet. This at this moment provided what is called resistance. It's level that a price had gone to before and appears to stall and have trouble going through. Again, another anthropomorphic term, right? The market's struggling to get through 1933. The real key levels for wave 4, according to Elliott wave theory, are here. These blue lines I've got highlighted. Fibonacci retracement levels of 61.8 to 38.2. So wave 4 is expected to retrace into that zone, and you can see it did go into that zone. It looked like wave 5 down was starting, but now it's pulling back up. So as long as we don't go above this level, there's still the high probability that wave 5 will ultimately go down. And it can even go above it a little bit, but if it crosses this 76.4 line, then the whole theory of this wave sequence is kind of blown, and something else is going on here. So we'll have to watch this through the week. Even if price, again, it looks like it's heading down, and if it continues down from here, then the wave sequence, let me clean my chart up a little bit, then the wave sequence will have been this, right? This, 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 and that'll be pretty clear. If it goes back up, which it could, if it goes, wave 3 here, 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 and if it goes, here up, it still stays in there and then heads down, right? Then that will have been the bigger picture, right? That this was the low, this was the high, and now new lows coming, and there was some smaller waves within all of this. So I think early next week it will really help determine the direction for the market. And at this point, I can't predict it. Now I do think all the signs are here. It's highly probable that we're going to head down, until this gets invalidated, until we actually go up to up into here. Then this is still valid that ultimately this is going to head down into this wave 5 target zone, which is here between 1622 and 1766. But how high will it go before it heads back down? That's really the question. Or it could be invalidated completely. And this is again on a fairly short time frame, 60-minute bars, and it's really a forecast out for the next handful of weeks. So early next week, if we see a pretty sharp move down like this, then that's pretty good evidence, and particularly if we take out this low, then in a straightforward manner, we're going to head down into wave 5. Alternatively, if it continues to, to do this and goes up, makes some more, it's a little bit harder to predict. And again, if it goes up here, then this whole theory is wrong. But at this stage, what we see right now, the reality is, at some point over the next handful of weeks, the highest probability scenarios that we're heading down in here into this wave 5 zone. So we'll have to see. There's not a lot of big news that came out last week or that's coming out in the week coming up. There's planned economic reports, housing, jobs, that kind of stuff, but no big FOMC announcements or anything like that. So it may be unplanned news that drives the market, and there's certainly a lot of things in play, with interest rates, energy prices, China, global economy, all that kind of stuff. So we'll have to see how the story plays out at this time. I remember a quote from President Harry Truman, who was being briefed by his economic advisors and by economists, and he said, what's the economy going to do? And the answer would be, well, on one hand it could do this, and on the other hand it could do that. And he is quoted as saying, what I really need is a one-handed economist. Well, that's a funny comment. That's what we want, isn't it? We want some absolute certainty about what's going to happen so we can go trade and invest and participate in that. But absolute certainty is really hard to come by in the market. But high probability does exist, and we can act based on that. That brings up a good point. As traders and investors, we often put a lot of pressure on ourselves to be right all the time, and we don't actually have to be right all the time. I just recorded a video, a teaching that says you can actually be wrong a lot and still be profitable if you're using really good risk management. Of course, we want to be right as much as possible, and that maximizes our profit. But I encourage you can take a look at this video. It's not very long, where I talk about how we don't have to be right all the time. We can even be wrong more than we're right, and if we're using good risk control, we can still be very, very profitable. So take a look if you're interested. So here is the S&P 500 itself. Before I was looking at the futures contract, this is the actual S&P 500 chart. You can see that we've got a really clear pattern here. And again, this is a daily chart, so every price bar here is a day. But in this current move that we're in, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, completely unbroken at this time. And so the highest probability is that this will continue on down. And no matter what happens on that smaller time frame, until this pattern gets broken and invalidated, you know, we're in a bear trend. The market's heading down, even though we get these intermediate rallies that go up and make higher lows. And I've been showing it for several weeks. I'll show it again real quick. If we look at this on a weekly chart, see how fast it can update here. The levels for this market to come down to are 1644 to 1343 for the S&P 500. And that forecast is unchanged for, right now. Here's the Dow, and it looks like the exact same pattern. The target levels for the Dow are 14,429 to 12,003. And so now let's take a real quick look at oil first, and then we'll close with gold. So here is the oil futures contract. If you've been watching my videos over the last couple of weeks, I'm really waiting. I really want to see a pattern where a bottom is firmly established, where it proves, just using that same Dow theory that I've been talking about, we want to see a higher high, a higher low, and I really want to go take out this level here. If we can do that, this is again a resistance level that it had trouble getting through before. So if oil can put in this high, some kind of low, and then move really strongly up, at that point, the correction in oil will have a high probability of having begun. Oil's come down, everybody knows this, ultimately from about 140, it was at 100 in the summer of 2014, and it's done nothing but come down since then. And the retracement, simply a retracement, a correction to that downtrend is going to take us up, $60 to $70 a barrel. And so we have time to make sure that it proves that that's really happening. Don't need to jump in and jump the gun. We've had some head fakes here where it looked like it was going to do that before. You can see here there was a higher high, kind of a higher low, but it never really broke through that last high with authority. That's what we want to see happen down here. Yeah, another anthropomorphic term. The market needs to break through this level with authority, right? But when it does, that's going to signal that there's a really high probability that the recovery in oil has started, and I can't wait, because there's going to be oil and oil-related and energy-related stocks. There's hundreds of them, and they have been beaten down. And when this recovery starts, when this corrective wave begins, there's going to be some amazing trade. There's going to be some amazing profits. And so I can't wait, but I have to. So I will wait. But I'll keep you updated on what's going on with oil. Let's take a look at gold now, which is a different story. We waited patiently for gold, and now it's happening. So here is gold, and it was beaten down nearly the same degree that oil was, not quite, but nearly the same amount. As the equity markets rallied for 6 years, gold was beaten down pretty bad. And I saw this pattern form at the bottom. Back when it was doing this, I said, hey, it's got to put in this little high. It's got to not go below this low. It did that. And I said, it's really got to break through this with some authority. It did this again. I go, let's wait. Another low. I said, if it breaks through 1113, and I said this 3 or 4 weeks ago, if it breaks through 1113, then I think the recovery in gold has begun. Well, man, look what happened. And this is what oil is probably going to do when it breaks through and proves that the recovery is underway. So gold has been amazing, and because we saw this coming, we've had some great trades. We're actually in option contracts on the GLD ETF, and we are in a gold mining stock. I'll show you that real quick just for fun. So before we look at that stock, let's look at just at the level here. So 1113 was the level where I said it would be proven it was heading up. It's currently sitting here at 1230, so that's about 120 points, about a 10% gain in gold. Okay, so now let's go look at this other stock. So as gold was going up 10%, here's a gold mining stock. We got in this at $1.25. This is MUX, McEwen Mining. We got in at $1.25, and it's sitting up here at $1.69. So when gold went up 10%, this thing's up 30 or 40%. We've already taken a third of our position off, locked in profit. We moved our stop, which is this red line above our entry. So we got profit locked in. The question now is, how much profit are we going to make? Not are we going to make profit? And it's already, again, 30, 40% profit when gold moved 10%. These kind of trades are going to be available on oil and energy related stocks when oil starts to move up, and we're going to be ready and we're going to trade them. So that's why I can't wait. It's going to be awesome. Well, that's the update for this week. As always, the market's been pretty interesting, and again, it may continue to meander a bit, and but it will find direction, and the high probability is it's heading down. That the bear market is still underway, new lows coming, and it's good just to be ready for that. Thanks for watching. Always use risk control. Always limit your losses in your trades, and stay tuned. We will continue to provide updates, and we will be looking for oil when it finally proves that it's going to head up. Again, that's going to be really, really good. We'll catch you next week. Thanks.